Hello everyone, my name is Khan and welcome to the new video. This is our putting all together series and this is our first video where I will explain you all about that how you can identify structure PY entry in a lower time frame and higher time frame PY. Everything will be covered in a one video step by step. And this is our first video of the series and you will get regular videos in entire month putting all together on a topic. In entire month in entire May month, I will upload 10 to 15 videos where you will get a different example and scenario, and also you will get all type of entry module which I am using and which I will tell you that exactly which one is suitable for you. So this putting all together series are going to be very interesting for you. Now let's back onto the chart and I will show you exactly that how you can take trade based on higher time frame structure and higher time frame PY and lower time frame CHoCH entry model. This is our first video of the putting all together series. So now let's see in a higher time frame first that what happening in a higher time frame and lower time frame exactly. This is our also used chart in a 1 hour time frame and you can use 1 hour as a higher time frame, 15 minutes as a higher time frame, even 4 hour as a higher time frame. So in this putting all together series, I will use different time frame and different lower time frame to see exactly how market react in a different time frame. So this is our first part of this series. So we are using 1 hour as a higher time frame and now we can see here that market momentum is a bullish. Before enter in a market, firstly you need to identify where is market going on. So firstly we can see here that if market trend is a bullish, so we need to mark the structure here. We can see clearly that market trend is a bullish and showing higher high is here. That means these are break of structure, mean the momentum is a bullish and everything looks bullish here. So when market momentum is a bullish, generally what are you looking here? Simply we are looking here for the buy after taking out the inducement right here. Once market taken out the inducement, that means that we are planning here for the buy to the upside and now we can expect some bullish momentum to the upside. So this is our first scenario is here, and next thing is here, if market creating structure is here and after taking out the inducement, we can plan for the buy on mitigation of the PY. So where is the PY in this case? Two PY is a possible here. First one is the inducement sweep which is happening here at this point right here. It means if market sweep this inducement here and close above it, then you can switch here in a lower time frame and we can plan here for the buy after lower time frame confirmation. And second thing is here, if market not sweep this one, then you have to wait for it to mitigate your PY. So where is the PY in this slide? We can see here firstly is here that order flow is our primary PY, not the order block. And if all order flow is mitigated, in that case you can use order block as a second PY. So in this leg we can see here this is our order block is here, right? So this is our order block. It means we can plan here for the buy to the upside right here. And second one is here in terms of the order flow, this is our order flow, but this one is not a valid pullback, so we can't use this one as an order flow. Look at this one. This one is the order flow is here. It means if price tap on it, so we can plan here for the buy to the upside right here. So this is our order block PY and this is our order flow PY. So which one you should use in this case? Look at this one. Order flow is a primary PY. Order block is secondary PY. It means if price taken out the inducement and tap on order flow, then you have to pay attention on order flow, not the order block. If all order flow is already mitigated, in that case we can use order block. For example, this one, if market momentum this one is a bullish and take a pullback is here and this pullback mitigate this order flow is like this one, that means this is already mitigated by this pullback. So we have only one PY is here right here, so we can use this PY as a buy side to the upside right here. So this point become our next PY and here we can plan for the buy to the upside. And in this case what happened here exactly, market not mitigate this PY here, and once market mitigate this one and we can switch here in a lower time frame. And what about lower time frame? Like if you are using 1 hour as a higher time frame, then what's a lower time frame? You can use 5 minutes as a lower time frame, and if you are using 15 minutes as a higher time frame, then you can use 2 minutes and maybe 1 minute as a lower time frame. But in this chapter I'm using 1 hour as a higher time frame and 5 minutes as a lower time frame. So this is our 1 hour and now we are again switching in a 5 minute time frame to see exactly what happening here in a 5 minute time frame. Then how you can take entry based on CHoCH and flip and what kind of entry is possible here. Look at this one. Momentum is a bearish here. So if momentum is a bearish, that means that everything is a bearish and we need to wait for some reversal confirmation in a lower time frame. It doesn't mean that you can directly buy here without any confirmation like price type on higher time frame PY, and you are switch in a lower time frame and just broke the high or low and you are planning here for the buy at this point. So this is not a way for the buy at this point, because market not create here any kind of like reversal structure in a lower time frame. Look at this one. Market momentum is a bearish here. We can see here exactly market creating lower lows and lower lows. Everything is here. So once market broke this high, that means we can plan here for some reversal confirmation. Otherwise, no. And also, when market create this one right here, also we need to wait for it some like inducement before the buy to the upside. For example, this is a CHoCH, means the structure is just shifted here, pair is too bullish. So this is our first indication here. What we need to wait for it to take out the inducement. So where is the inducement? In this leg, we can see clearly market going higher high, taken out this one, push higher, and we can plan here for the buy, and this point become high probability zone for the buy to the upside. And let's see what happened next after this one. Market trying to push downside and market taken out the inducement right here. Once market taken out the inducement, it means this is our area which taken out the liquidity, and we can plan here for the buy to the upside if market create here any kind of like bullish structure. Look at this one. The previous high is a broken right here, and then what happened here? We are planning here for the buy. Look at this one. In this case, we can see here two possible scenario here. First one is order flow is here, and second one is order block. In this case, which one you should use here? This is another question is here. Same thing happen here in a higher time frame, and this is happening in a lower time frame. So which one you should use in this case? Because this is a lower time frame and same thing happen at this point. Look at this one. And as you know that what we use here, in this case we choose here firstly is the first primary thing is our order flow. Look at this one. This is our order flow, and where is the entry in terms of the lower time frame? Where is the entry and where is the stop loss and where is the target? This is another important thing is here. Look at this one. In this case, what happened here? And this is sometime you will get these type of situation, and sometime is a different situation. So in this case, if you are buying at this point, then where is the stop loss? Look at this one, right? If you are thinking this is a correct stop loss, absolutely not. Why? Let me show you exactly what happening here. If you are putting the entry here and market little bit push downside and mitigate this unmitigated order block, right? And then market went up. So how you can deal in that situation? In this case, you need to put your stop loss just below this low. This is our safer stop loss, and this is our first stop loss when you can take a risk here. But this one is a 50% of the probability that market can be react at that point, and the 50% probability is here that market react and fail and mitigate this one, and then market can go higher. So you need to prepare on both side of the buy side, and this is exactly happening in a higher time frame and lower time frame as well as here. But in a lower time frame, we can enter here and put the stop loss just below it. But in a higher time frame, we can see here we are not buying here. If you are buying here, then you need to also put the stop loss just below it. So this is a way when you can take your like entry and put your stop loss. Look at this one, right? So this is our entry here, and this is our like target here. Sorry, like stop loss here. Price type here gives small reaction and failed. So if you are buying at this point, then very high chances that market hit your stop loss. And then what happened here? And look at this one, market trying to go higher, and this is our structure forming here, and market trying to go higher and higher and higher. Look at this one, how price is reacting at this point. And one more thing I want to mention here, you need to like put your target. How you can put your target? Top to bottom is here. 1.618 is our target right here, and this is our 1.618 is our next target. You will get almost like 2 RR, right? So this is our target is here, and you can set using Fibonacci tool, and also the previous swing high low you can set as our target right here. Okay, and why this entry setup is a fail and why this is a working? Look at this one. Both entry are same, but the main thing is here to putting the correct way on of the stop loss. Like if you are putting the just below it, so there is, look at this one. If market came back this one, that means the structure is a change. Anything is a change here? No. If market tap here and just broke this one, for example this one broken, so if market broke this demand zone is here, that means anything is a change here? Absolutely is a change here, because of the structure main high and main low was created here, break the structure and broken this one. That means the trend looking for the reversal, not for the continuation. So you need to put your stop loss on a way when you can expect that if market broke that stop loss, that means trend has been going to be changed, not for the continuation. If market like tap here and buying here, and then what happened here, market not going higher high, and then market push demand zone here and then going higher high, it doesn't mean that market trend has been changed. Market is still bullish here, but you putting the stop loss on a wrong way. So you need to put your stop loss on safer side, not don't chase a risk reward like 20 hour 10 hour. You have to put your stop loss on a realistic way and set your target realistic. That's why these things happen at this time, and market fail your order flow is here and what working from the order block. But if market creating this kind of order flow, so order flow will gives you more high probability setup for the buy to the upside. This is entry criteria and stop loss and target both will be same here. This is a 5 hour and this is almost 2 hour. It means the risk reward is almost double. But in a first risk reward, you can see here the market hit our stop loss, and a second one market hit our take profit. But in this case, you will get 5 hour. But what happened here? You will get minus 1 hour. So that's the reason you need to put your target and stop loss everything very like realistic way, not the randomly like anywhere. So I hope you learned that how you can identify structure and PY, and which PY is working, and when you can take entry using lower time frame, and what kind of thing you need to understand before the buy or sell. So thank you so much everyone to watching the entire video, and I hope you enjoyed this series, and this is chapter 1 in an entire for putting all together series, and I will post next video where I will explain next example with different time frame and different scenario. So thank you so much everyone to watching the entire video, and if you are new, subscribe our YouTube channel and join our free Telegram channel, link in description. Go and check out. I will see you in the next video. Happy trading.